right, here we go. So, welcome to my stream where I am trying to build up my portfolio. So, I thought I'd start off by just doing some research. I've been looking at Robinhood, and I was going through my history, and I saw that I had some dividends um, from a company that I unfortunately sold back in about 2021, and company it, it oh yeah, it was Rhythm Capital. Rhythm Capital, one that I was looking at. I made some pretty good money. I was looking at their dividend. Now this one might be considered, you know, risky. And I'm still learning about investing, but I was looking at them over time, right? So I was with them about 2021 and got in probably around February. Right? Around that time, it was trading about 990, and it's gone up, it's gone down, and now it's currently at about 1040. So it's not bad. It's a real estate investment trust, and which means that there is some opportunity here. So I thought I'd just kind of show you what I do to learn. Right. So here's Rhythm Capital. I'm using Seeking Alpha. Hope to get them to sponsor me today here. But so this is them right here, 52-week range. So low of 740, high of 1115. And let's see, yield is 9.38%. Market cap 5.15 billion here. And it is getting some news here. And like I said, I'm learning to be like, in the research phase right here. Yeah, get this thing out of here. But so it says that they do have some recent acquisitions to support its high dividend yield, and the dividend yield was like 9%. So it's pretty high, right? You look here, 9.38%. And normally, I'm not the biggest fan of dividends, of this size, right? I think it's kind of crazy, to be honest here. But yeah, it's pretty nice, right? So again, do I want to search for this in the over the year to add it to my portfolio like it was before, or do I want to keep going, low and slow with some of my other dividends here? But and their goal has been to diversify its business mortgage servicing rights into a diversified investment platform, including other areas of the credit segment. Despite that, its business model is still quite exposed to mortgage servicing rates, which account for some of its 55% revenue. To be honest, I need to do a lot more research into what that is, because I really don't know that much about mortgage servicing rights. But that's okay, right? This is why we're here, is to learn and to understand more about this. Let's see right here. There are other mortgage real estate investment trusts, such as Annaly Capital Management or AG&C Investment Corp. And revenue in Q3 of 2023 was 463 million, a slight decrease from the previous quarter due to some sales of excessive MSR. So again, is it all bad? I don't think it's all that bad, right? It's not the end of the world here. but they're saying that Goldman Sachs, let's see. So are we saying that due to its acquisition of a part of Goldman Sachs Marcus Loans, so Rhythm Capital invested 145 million to purchase a 1.45 billion unsecured consumer loan portfolio. So they're saying that they bought this to increase their interest income and shouldn't lead to many losses in the short term. And the reason that they were able to increase its revenue was because of, okay, so this is the reason why their revenue increased in quarter three to 1.9 billion, up 4.8% compared to the previous quarter. Right? So not too bad. Let's take a look at what other people are saying about them. So Pacifica Yield is saying, yeah, they're paying up 9.5% yield, and that's covered by earning available for distribution. And it's trading at a 15% discount to book value at the end of its most recent quarter. Well, if we were to go back to that, for the capital, take a look at the dividends. (9.38%). So 5-year growth rate minus 12.94%. They've been paying a dividend quarterly of about 25 cents a share. Well, let's see if we can't figure out what a dividend calculator, if we were, drop 1,000 on it and do it for 3 years. Let's see what we got here. Dividend calculator. Let's try this one right here. Market beat. What do we want? Rhythm, and individual stock. Say, I want to do drip. And let's see what I want. It is at 9.38%. That is correct. Number of shares. So let's pull out the calculator. That is, let's see, I want to do 1,000. Today's price divided by 9.38. It's about 106 shares. So I'll say about 105 shares. And 1,000. Dividend rate. Good. Let's calculate dividends. Okay, I'm doing drip. Better reinvest. So 20 years. I want to, I don't want to do 20 years. I want to do less than, let's see if we can't figure out how to get some years. Here we go. Years invested. Let's do 5 years. Right, that's what we wanted. So, okay, so after 5 years, and I am going to contribute $1,000 each year. And we're saying that at this current rate, I'll get about $3,200 over 5 years. After 5 years, my portfolio will grow to about $9,607. So, okay. take it up to 10 years. Let's see. Let's do, let me add my little calculator here. And hide Robinhood. There we go. And let me pull up my calculator. And I want patient later. There we go. All right, so let's do this. Let's do this. How many investment days? All right, so 252 trading days. Let's go back and do our math here. So let's go calculator. Where did you go? That I want to do 1,250 days a year. I'll need to invest 396 every day and dollar cost average. I think most of the investors could do something like that, right? That'd be you not buying a Starbucks every day. What else cost 396? What else? Or maybe a fast food. Yeah, look at that. Budget of $4 a day on Reddit, budget food. Yeah, so basically, don't buy Starbucks, buy ground coffee, simple things like that we can do. But yeah, so I think you could easily, do $4 a day and you'd be, not bad, right? That's if the dividend pays out and you're in this for the long haul. But honestly, I don't see any real issue with it. Yeah, if you think about it like that, I don't see why anyone would not want to, be investing long term here. Honestly. Let's see. Let's do one. Let's They're saying the census paid 90 cents in 2021. Saying that census yield is look at Maybe it is $1 back here. Say, let's math here. We got our prices. What? Let me see. This can't be right. That's way too. What is the out? Okay. Okay. So it's for a year. I got it. I got it. So basically, that's where it comes from. So for 1 year, you get $1. Every quarter, you get 25 cents. Okay. So that makes perfect sense here. So again, if yeah, not bad. So 105 after the first year, right? I would calculate for 68% payout rate. So that's pretty good, honestly. And they've been pretty consistent here. 25 for the past couple years here. Look at that. Since 2021, they were out every 3 months, and the last dividend. Yeah, that looks pretty good, honestly. Um, all right. Well, that's pretty cool. I'll have to see if I can get a kind of better calculator. Let me see. Dividend. We tried market beat. Let's try. Here's a couple. We got to choose from. Here we go. So, I like the one with where you put it. RITM. I do like the fact that they've been paying a dividend for looks like what 10 years straight now. So that's pretty optimistic, honestly. Top holders of Rhythm. Let's see. Vanguard, BlackRock, Geode. Okay. They're holding. That gives me confidence as well. All right, let's see what this one does. Principal, let's see. My initial principal will be, say, 100. I'm going to contribute 1,000. I'm going to contribute every. Okay. And every month. My where do I put in the piece here? You hear that little beep? That is the annoying Apple camera. It definitely wants me to plug in. I mean, it's an awesome camera. It's a pretty awesome feature. I'm loving my uh, Mac Pro. My M1. I recently had a couple of. I had two that I found in the trash, and I rehabilitated, but I gave to my friend DJ. But I had two Power Macs, um, and they were nice. But they were like 40 pounds each, and they just were not energy efficient, and they were just kind of sitting there. So I ultimately gave in, and I was able to get this M1 Max from. I got it used from a guy. He was getting the M3 Max laptop, so I was able to get this one with the gig of RAM. I'm sorry, with a terabyte hard drive and 32 gigs of RAM for about $1,500. So I saved about, if I wanted to get it from like B&H Photo or Amazon, I would have paid about $2,100. So I was happy to get this pretty fast, amazing machine that was a couple years old at a pretty big bargain. Fun fact was that I actually went and purchased an M3 Max, and I spec'd it out to be about $4,000. And this is the truth, right? I had it for a week and I returned it back to Apple. So I was like, this M1 Max is fast enough. And, I turned it back to Apple. There was an awesome return policy, got my money back on my Apple card. The only thing that's crazy is that I had actually started to pay off the card early, right? You don't want to have any debt. So I paid off the card, started to pay off the card early. And when Apple gave me the money back, I had a $2,000 surplus on my Apple card. And if you don't know about the Apple card, it's kind of wonky in the way that they do things. It's totally not normal. And they're trying to be cool and edgy, but it can be a pain, right? Trying to just pay the bill. So now I've got money on the card that I can't really transfer over to my checking account. So you live and you learn. That's the moral of my story. Back to dividends. Here we go. All right. So stock price is, what do we say? It's about $10 right now. 1066. Okay. 1066. Number of shares 100. Voting period, we're going to say 5 years. Dividend yield was, let's see, 3. Yield, it says 9.3. Pretty high, right? Like I said, I normally don't ever buy stuff like this. Dividend tax expected rise in dividend. What is this? How much will the dividend rise per year? I think it'll just hold steady, right? So we'll keep it at 0. Expected rises. How much will the shares gain per year? 1%? Okay, sure. That's conservative. Let's be conservative here, right? I would rather be conservative than not. That looks good. So we're going to say we're going to do 100 shares. We're going to invest, $1,066. I like this one because it doesn't let me. Oh, here we go. Annual contribution. That's what I wanted to say. Okay, we'll say 1,000 a year. That was that what, $4 a day per the trading day. That's not bad, right? And we'll say calculate after 5 years, about $8,438, about 39% return, about 17 from dividends. Okay, with the pay in the schedule. Okay, so let's see. Here we go. This is what I wanted. Stuff like this. So after 1 year, I'll have 100 shares. And after 2 years, about close to 200 shares, 196, 396, right? And again, you can see it start to increase here because of the, but I can do $4 a day. Let's increase it to 10 years and see what it looks like. So that's not bad. $22,000, right? I don't ever drink Starbucks anyway. So not like I'm losing anything here, but that's not bad. So from the purchase, right? So again, I said this is why people get excited, right? Because of these crazy amounts. But again, the 9.3%, that's a lot, right? And the more I'm reading, the more people say to stay away from those types of stocks. I think because they say they're volatile, or maybe it's too good to be true. That might be it as well. But again, I'm seeing that, 13 years we're seeing here, and a lot of companies, Vanguard, BlackRock are some of the top holders or in this. So, is it that bad? I don't know. Let's take a look at what their website looks like. Pretty fancy. See how much? So they are managing 35 billion in assets. That's a lot, right? It looks like what they've paid out $4.9 billion in total dividends since inception. Wow. Let's see, we own and actively manage a family of operating companies across the complete real estate and lending lifecycle that feed our strategy. Execution, market insight, and risk management for a competitive advantage. I guess my question is, how much longer can they go? Like, will the bubble burst? Is there a bubble? Right? All I hear all day is that young people can't buy houses. And this is not just an American thing, right? I just saw a video about people in Australia, about this young guy who was living in a van, and he was saying, van life is basically glorified homelessness, or as they say these days, unhoused. You're unhoused, but are they going to expand into this rental market, right? Is it really feasible, right? At the end of the day, that's what I'm interested in. Does it make sense? But yeah, I think that's pretty cool. So Rhythm Capital, I'm going to take a look at them. So the past 5 years, they dropped about $5.16 in the past 5 years. If I had got them during COVID, they got to $3.33. Wow. Definitely not in the market back then. In fact, I sold some stock, right, to basically put the down payment on my house here. So I consider that a wash, because the house has gone up more than the stock purchase price. So that makes sense to me. Well, I don't feel that bad, but I would rather. But nowadays, I would rather hold and think about money differently and take a look at other types of investments here. But not too bad. So I was just browsing my history of dividends and just happened to see this company. I was like, wow, they were paying me some pretty good dividends, and I was like, what is this company? And again, I wasn't really looking at my portfolio that much these. And if you I have a question for you, right? do you have a financial guy? Because I do, and I'm thinking about just doing it myself, right? Because I know that he charges 1%, and I in fact called somebody last Wednesday to see if they would take a look at my portfolio, and they again were going to charge 1%. I was like, that's a lot of money, and you know, are you going to beat the S&P? I don't really think so. So what am I paying you for? So I think the more you start to learn and self-educate, right, the more you're saying like, well, I can probably do this myself, right? My my ignorance is fading, right, with the more knowledge and the more research I do. So I'm now starting to understand what the S&P is, and you know how most financial analysts do not beat the S&P, right? So, but if you were to invest in certain um, ETFs, index funds that are aligned to it, right, you will be doing pretty well. In fact, often better than some of these other um, brokerage or these independent real estate people. So, something that I've been thinking about, as I start to learn more, is say, we'll see. But yeah, this is Rhythm Capital. See what else? Anything else to see about them? Growth of AUM is going to be dramatic. What in the world? Average assets under management. Okay, look at that. Learning something new. So growth of assets under management is going to be dramatic, with RETM set to announce another major acquisition after closing its deal to buy Sculptor. When was this date? This was 11. So, all right, Rhythm Capital, y'all are looking like you are trying to do some stuff here. Let's see what they're saying here. Is this guy a fan or not? I'm buying the comments. Preferred looks good. What does that mean? Preferred looks good. Let's see. So he's saying it is a buy, and they are diversifying their portfolio. The book value was 5.95 billion, 12.32 cents a share, growing 16 cents sequentially, and by 1.78% over the year ago comparison. This growth has come despite the Fed funds rate rise, increasing to multi-decade high. The current discount book developing in 2020, and book value collapsed on the asset on the pandemic. Yeah, that's when I saw it drop to $3.33. Discount has remained volatile but sticky since then, critically on being paid 25 cents per share quarterly while waiting for this to close, a 9.5% annualized forward dividend yield. I last covered Rhythm in September to go over uncertainty surrounding the close of its acquisition of Sculptor. So, the wow, it looks like they're trying to grow their assets under management to $50 billion by the end of 2024. So they are in buy mode. Let's see what Twitter is saying. Ever since I started to look at real estate, I'm certainly I think I gotta do like that search. Here we go. Rhythm is set and ready for a run up. Will this mean a jump in price action for Rhythm, O, and other real estate investment trust? Let's get some comments here. Who's talking about them? Rhythm is set and ready for a run up. Rhythm is set, ready for a run up. Is this the same Discord or not? Let's see. It is. Are these bots? Look at this. So Discord GG GYEWBXP. You know, this is probably some bot stuff, honestly. I don't know. Same one. Elon, you got to take care of this, man. Annie. Here's the article I was looking at, Seeking Alpha. No other articles, huh? This guy, look at that. Scan on high yield with the following criteria. Let's do let's try to search for the word here. Rhythm, capital, and latest. So BTIG sticks to its buy rating for Rhythm Capital. Buy sell signals. Rhythm is down 0.3%. Yeah. Certainly interesting. What is this right here? This looks like a pretty good graphic here. Let's see the bottom 5 performers. Where's Rhythm? Rhythm is the top 5. Let's see what we got here. And there we go. So I guess they're saying, is Mort the best one? MORT? Oh, is that the yield? How are they doing this? Let's see. Maybe this is the line for the worst down here. I don't know. Best and worst. Not alphabetized. Okay, look, these are getting in the negative. So these are basically year-to-date performance here. Okay, so I see it. I get it now. Angel Oak Mortgage. Don't know what they are. Seven Hills. Could go. Rhythm Capital. Mid-cap company. Harbor Reality. Okay. Don't see O on here. I like this tracker though. It looks like a pretty good opportunity for a spreadsheet. You know what I'm going to do? I'm going to, if I can put this into Chat GPT, a little bonus for it. Let's go to Chat GPT and if I can paste it. Oh, awesome. All right, let's switch. We're switching right now, everybody. Let's turn off the calculator, get out of here, and let's go to my application and let's change it to Chat GPT. And turn it on and watch this. This is pretty cool, right? You gotta love technology. Let's fit to screen here. Fit to screen. Do. Okay. So got the image here. I'm gonna say no. Which of these REITs and I'll say plain debt ratio. What is the difference in micro cap app. All right, let's see what it can do. Come on, Chat GPT, don't let me down. So the debt ratio is a financial ratio that measures the portion of a company's total debt to its asset. It indicates how much of a company's assets are financed through debt. High debt ratios signifies that the company has taken on a significant amount of debt relative to its assets, which can be risky if the company isn't generating enough cash flow to meet its debt obligations. Conversely, a low debt ratio might indicate a more conservative approach to leverage and a greater ability to absorb business downturns. Well, who knows what, right? Who knows what this next year may bring? I don't think anyone knows, honestly. Like, it's nuts, all these layoffs I keep seeing everywhere. Right? So if we look back at Rhythm Capital, they've got 68%. So, what happens when the debt has come due and they sort of outdue and they have enough cash on hand? And let's see. Let's say, here we go. Micro cap, mid cap, and small cap refer to the market capitalization of companies. There's the total value of the company's outstanding shares of stock. So that number's making me crazy. Here we go. Plugged it in. Microcap companies are the smallest publicly traded companies with a market capitalization between 50 million and 300 million. Rhythm is what, mid-cap? Let's see what they got. They have medium-sized, and their market capitalization is between 2 billion and 10 billion. They're considered to be more established than a small cap company, but still offer growth potential. They are less volatile than small cap, but can be riskier than large cap companies. Investors choose different cap companies depending on their investment strategy, risk tolerance, and the potential for growth ability in their portfolio. Let's see how good ChatGPT is at doing some dividend. So let's see if we can't copy and paste some stuff here. Here we go. Let's try 5 years. And I want to screenshot this. Actually, I'm going to do a new screenshot because I got stuff. Paste this in. Okay, let's do this. So let's say assume I invest. What did we say? We said about what, $4 a day. So I invest $4 and 152 trading day. Rip. With initial of dollars annual Zoom. Let's see. Do calculations. Do calculations at 5 years, 10 years. And three, Zoom. $2,000. Share it. Yeah. Average. Here we go. Let's see what we got. Big money, big money. What I did was I basically used this image, right? I took a screenshot from Seeking Alpha to get my numbers here. So I'm curious, as to see how good ChatGPT is, right? We all know it is hit or miss. See what we got here. Analyzing it. I could have worked on my English. That probably would have helped. Looks like the image is still being. And look at that. So that's pretty cool. You can see the code here. I am really amazed by this, but I'm also thinking like, how many jobs will. Here we go. So with drip investment enabled, assuming the dividend yield remains consistent throughout the period, and you invest $4 a day with an initial investment of $100 annual contribution. Here's what the future value of your investment look like. In 5 years, would grow to 15,000. 10 years, 42,000. 15 years, 84,000. A long time. $4 a day, I guess. Let's see. These calculations assume that starting in year 3, you double. Okay, so it did factor that in. Nice. 2,000. The dividends are reinvested back into the investment. Okay, compounded the growth. These do not account for taxes or changes in the dividend yield, which could affect the annual returns. For comparison, the average annual return over the last 90 years is about 9.8%. However, this can fluctuate. That's true. See, it's asking me a question here. To make a direct comparison, we would need to calculate the future value of an S&P 500 investment using the same parameters. Sure, but okay, let's try it. Sure. This is going to come back with. But yeah, you got to love this technology, right? It's pretty cool. And I'm probably going to go back in after this. It's getting pretty late where I am. I'll probably come back and do one of these tomorrow. This is pretty fun. Maybe, if you want me to do a comparison about a stock, put it in the comments and I'll be glad to do some research. But it's funny because I had completely forgotten about this stock. And like I said, I was just browsing in my portfolio and I saw old dividend payments. And I was like, these are not too low. These are actually pretty nice. I think I like sold out of my position for maybe $900. So with the comparison, okay, so not really too much of a difference here. Cool. Well, all right, this is fun. I'm gonna have to work on my little setup here to make it, more high tech, more advanced, but work in progress, right? Work in progress. All right, this is Ian. I'll see you in the next one. Like I said, put your comments in the chat. Let me know what stocks, what stonks you want me to look at. I'll be glad to do some research. I'm gonna nerd out and see what else I can find about Rhythm Capital and come up with some other, potential and theories, right? Because I'm trying to think about the common man, right? The average investor, maybe someone who doesn't have, all the money in the world. What can they do to set up their future for financial success? That's the goal, right, of this channel. Well, I will see you in the next one, and I'm going to go ahead and end it, and y'all have a good night.